Hey there, Lincoln here from bullacademy.org. Today I want to talk to you about this week on the stock market and just run through just some few topics that we have here, from CCIV to the reopening place, inflation, interest rates, just buying a dip, Jim Cramer's 5 stages of grief, uh, Tesla and their full self-driving delays, and then Lordstown's motors and their debacle that's going on, and IPOE and how they're disrupting IPOs. We've covered that yesterday, so if you haven't seen that full video, go check that out, live stream. And yeah, there's a lot to cover, so we're going to jump in first. Before we get to that, if you enjoyed the video, like it below, subscribe to the channel, hit the notification bell, comment your thoughts, and of course, if you want to support the channel financially and help us grow, reach more investors, get more access to me, get direct access to your investment questions, then join us over at patreon.bullacademy.org, and you'll be able to engage in our Discord channel where we share knowledge every day, discuss the stocks and SPACs we're all invested in to help one another build long-lasting sustainable wealth. And of course, you will have a chance at winning $200 every month just to become a loyal and engaged patron. And it's been great. There's about 100 of us now where we all, give me 1 second. Lower than recommended bit rate. Make sure my internet's working correctly. And should be good. So, like I was saying, we'd love to have you over at patreon.bullacademy.org. There's a lot to cover. If you have any thoughts, let me know in the live chat below. We'll get to those comments as we usually do. And yeah, let me know which one I'm going to talk about, and we can improv as we go. So, as I said, there's a lot to cover. So let's jump in with the reopening plays and just the sentiment in the market right now. So as you know, we've been going through a lot of hard times right now, and people are running away from the market. And it's unfortunate because when the market is roaring and everyone's excited, that's when people come into the market and they buy the top of the market. And then when it goes back down, they run away because they thought that they were going to get rich quick. They were going to 10x or 100x because everyone on YouTube is telling them, hey, this is the next 100x penny stock. Come buy this and go and get rich quick. And that's not how it works. You have to invest for long term. So when the market is doing super well, yeah, come in, because you're supposed to jump into the market when you realize that you have a good opportunity to invest. And then you're supposed to hold for the long term and continue to invest. Right? But what happens is people come in and they're excited, but then they run away once everything starts going down a little bit, and we're down 20%, 30%. And like I always say, in those moments when you're down 20, 30%, that's like you're going to the mall and seeing a 30% off flash sale sign. You're supposed to go towards that and buy, right? Because the items in there haven't lost any quality, right? They're the same items. It's just the business is doing a sale. Right? Sentiment changes. The markets go up and down. So people are afraid of the turnaround right now because there's let's go to our picture in picture here so we can see what I'm looking at. And right now we're going through a moment where people are afraid of rising interest rates coming soon if inflation does exceed or meet the Federal Reserve's target of 2% and continue to exceed that. They believe that we're going to have rising interest rates from near zero right now to, I don't know, 3, 4%, 5%, where it's normal to have that. And of course, that will lead to lower returns on investment in growth stocks. So people are leaving the growth stocks, going to the bonds and all of that, increasing the yields on treasury notes. And there's a cycle, right? The markets go up and down. So they expect that to happen, but the Federal Reserve has come out every time and said, "Hey, we don't expect this to our policy to change. We're still looking at 2023, 2024 when we expect interest or inflation to reach 2% and exceed that, right? We hope that we can actually reach that goal, but people don't believe them. They see that we're getting vaccines out. They see that people are getting jobs. The unemployment rate is going down." Right? People are getting back outside, doing things, becoming more, getting back to consuming. So everything's pointing to good signs for our economy, our actual economy, which would mean that the Federal Reserve would then have to back off on their current quantitative easing policy so that we don't get overheated in our economy, right? We don't want to borrow too much money. We don't want to have too much spending in the government. So that's the fear. But again, the Fed just keeps saying no. We might see a little spike in inflation for the short term, but we don't expect that to continue and have a adverse effect on our current policy. We still expect 2023, 2024. So that's the Fed stance, and they're calling for Congress to do more to help the economy recover from this pandemic and this recession that we saw last year when the markets crashed in March and April. So the Fed still says, hey, we still believe in what we said before. We don't see inflation rising above 2% or even getting near that until 2023. So we're staying at our policy. So it's unfortunate that people are being scared off, because this is what happens every time. You come into the market at the top and you sell at the bottom, and then you get afraid of the stock market and you leave and you don't come back. I had an older friend of mine a few days ago who told me that he got in on a dot-com bubble and he hasn't returned to the stock market as an active investor. Now he just does the index funds, and that has its own problems, because index funds, they're safe, but that's what you get. You get safe and not really much returns. You get 7 to 10% a year, right? So you're going to grow very slowly, and yeah, it's, in my opinion, it's not very meaningful. But for someone who doesn't really care too much and just wants to get the safe 7 to 10% return, that's fine. But you can do better without having so much risk. And it's unfortunate that people get scared into going so risk off in these downturns, because we've seen worse. We've seen way worse, and the market continues to go up over time, right? History has shown that. Of course, their past indication of success does not mean that you're going to have future success, right? But we can learn from history. We've seen this over and over again. So anyway, let's move on to Cramer's 5 stages of grief, because it's in the same vein. Cramer says that we are in the 5 stages of grief with the current downturn and downward spiral. So he expects that we're not gonna get a full rebound until we go through this whole process of grief. So I want to watch his video, portions of his video, just so that you get it from his mouth, and he can tell you what his 5 stages of grief are, how he measures that, and when he expects us to actually get through all of this. And then of course I'll chime in with my own thoughts on it, because I don't fully agree with his take, but he does have some good points. So let's watch this clip and make sure that I have my sound on correctly. Give me 1 second. And we should be good. Let's do this.
Nosedive 2.11%. The answer? Well, there are a lot of different ways to spot a bottom. And while a bounce might be in sight, it sure makes sense after all this relentless selling. An actual bottom, it may commit, where you can commit a lot of capital? No. Too many stages away to feel on solid ground. So let's go outside the world of dollars and cents and talk about something that we may all understand from psychology class. Yes, let's talk about the 5 stages of stock market grief. We got denial, we got anger, we got bargaining, depression, and finally acceptance. Right now, even after a 6% decline, we still got a ton of denial, and that's just the first stage. People don't want to believe the sell-off is real. The market's been so good for so long, and many newer investors have never seen this kind of pummeling. So the downdraft does seem pretty surreal. And hey, denial's easy. We've got the pandemic on the ropes thanks to the vaccines, right? So that's positive. And there's the prospect of a big stimulus bill, more checks coming our way, positive, with some of that money flowing to the stock market like it did last time. Denial always sounds reasonable, though. And I was going over this with Helene Meisler, some fabulous stuff on Twitter she does. I've known her for 30 years. It's too early. We want to convince ourselves. That's what we're doing. We're convincing ourselves that any decline is merely an interlude. It's a dip that needs to be bought. But when the economy reopens, that changes everything. We already have some nascent commodity and wage inflation in the system. Once you throw in a huge stimulus package, and suddenly lots of investors are worried about an inflation scare, like we saw in late 2015, the last time the economy was coming out of the doldrums. See, at that point, Fed Chief Janet Yellen raised interest rates, and the market took it on the chin, even though we all knew it was going to happen. Well, this time should be different. I mean, today, our more dovish Fed Chief Jay Powell took a different tag. He acknowledged there could be some uptick in inflation. He said, don't worry about it. He practically told us to relax. So what happens? Would it have been better if he'd said we had to raise rates? Probably, because the bond market reacted viciously with long-term interest rates spiking. And that's what took the whole stock market down. And believe me, just go look at his talk. You'll see what he says, and then watch the averages. It's cause and effect. In short, stocks.
So he's just going over what I just said about the Fed chair. So let's get to where he talks about measuring this the stages of these 5 stages of grief, and I can talk about that after. But let's just watch what he says here.
I think we don't stop falling until we get more anger, more bargaining, and more depression than we've had. How do you measure these emotions? Well, I have ways to do it. I use the proprietary oscillator that I've mentioned a lot of times from the S&P. That measures where we are, quantifying the level of selling pressure, or the level of these. When we reach -5 on the oscillator, that tells you we're pretty depressed. When we reach -7 or 8, that tells you we've accepted it. This evening, we're only at -1.5. I don't know, kind of here. Which brings me to the hunt for another way out, what I call the crescendo, the whoosh. See, there is a shortcut through the 5 stages, one that takes you from denial straight to acceptance. But if it comes at a real cost, people, you need a gigantic move down. And it's got to occur in 1 or maybe 2 days. I'm not talking about a 1 or 2% decline like today. I mean maybe like a full-blown 4, 5, 6, 7% whoosh, where there's a collective sense that the market's toast. No deny it, nothing to be angry about, no one to bargain with, depression ongoing, and acceptance that I am never, ever going to own another stock again. All that happened in the early February of 2016, only to be followed by what? You know what followed it? A brand new leg up as the bull market started all over again. And then it went on for years. And you made a ton of money if you stuck with it, rather than accepting that it's the worst, most horrible thing that has ever happened to you. So how do you handle the 5 stages of grief from here? We're going to get bounces that make people feel like their bargaining has succeeded, but it hasn't. As I told people today in my actionalertsplus.com call, if you lighten up into one of these things, right, when a little spikes up, you're going to be ready for the moment of capitulation, the crescendo, the acceptance that marks the trough. And most people are not light enough right now. They have too much merchandise, bottom line. If you want to be able to bottom fish at lower levels, make sure you got a little cash to be able to do it with, which means on the obvious rally.
Okay, and that's where he stops agreeing with my stance. So what he's saying there is that we're going through these stages, and people are denying it, and people keep buying in on the dips, expecting it to. Excuse me, how's the streaming? Because YouTube keeps telling me that there is an issue with the stream. Let me make sure everyone's good. 1 second. YouTube's telling me there's an issue. So I want to make sure that you guys can all hear me still. This is weird. Let me check my... Sorry for the interruption. Let me make sure everything's good here. Be right back. Yeah, everything should be good. So let's keep trying it. If it's not working, I'll figure it out later. But let's just keep going. So Cramer is just saying that okay, we're dipping, and everyone's talking about a dip, but it keeps dipping, and we have no idea how far it's gonna keep going. And at some point, we're just gonna have to accept that hey, we're in a dip. We just let it go to the bottom. let it fall let it fall steeply, like 20% in a day, just awful. But at that point, once that's over, then we can rebound like we did back in March and April of last year. So, and of course, a few weeks ago, the same thing happened where we went so far down and it was slower, but then one day it just fell super fast. And that's when we finally went back up, but now we're going back down again. So eventually we'll reach this acceptance. And he recently said this week that, hey, we're in the depression stage, so the second to last stage of this whole 5 stages of grief. So hopefully soon we'll see that big drop, and we can all go sales what's it called, go on a shopping spree to buy these dips. And I've been buying. I'm not one to really take much off the table often, but I've just been buying whenever I can. I have the money. I go in and buy on these big dips, because there have been pretty sizable dips, 5%, 10%. That's pretty good discount for me. So I enjoy that, and I enjoy shopping on these dips, and hopefully soon we'll actually go back up and see something like we had last year. Of course, last year was an anomaly, so we might not see something like that again for a long time. But I think that once the economy gets back to full swing, and you are investing in good companies that succeed in good economies and bad economies, like I believe that my companies are companies that will do well in the reopening, and they did well during the pandemic and the recession. So I feel pretty safe in this reopening, right? So that's my take on that. I think if you're panicking or upset about the downturn, I think you should take a different approach to thinking about it. Try to take it as a opportunity to buy more positions, more shares of your highest conviction plays. And that's what I've been doing with CCIV, IPOE, especially Tattoo Chef Inc., and so many others, right? It's a great time to be buying when the market is going sky high. People love to buy because it's exciting, right? It can only go up, but when it's going down, everyone's afraid and run away. Don't do that. Stay at it. We've seen this over and over again. The market's going to go down, but then at some point it's going to come back up even higher than it was before. So don't run. Go buy that sale. Let's move on to CCIV. I'm still getting notice here from YouTube that they're not receiving data. So I hope you can all hear me. I hope everything's good. A little choppy. Let me read the chats real quick before we move on to CCIV. Some people are saying that it sounds fine. Some say it's a little choppy. So hopefully we can actually continue on a steady path here. But let me close this YouTube tab I have. Maybe I have too many tabs open. And let's read some comments from the live chat before we do CCIV. So JF says, Lincoln, you are on the verge of crying. And he laughs at my charge point, TCCF, and open door positions. Hey, like I said, when my stocks are down, I am happy. I love seeing red. I love buying, because in the short term, that is, of course, because I know my companies. I understand what these companies are doing. They're much bigger than most people realize for the long term. So when they're down, I'm not crying. I'm happy. I love seeing red. I'm going to buy more, and I have been buying more of TTCF, ChargePoint, and actually haven't bought too much Open Door any of Open Door, because I have what I need right now. So that's just where I'm happy at, about 1,000 shares. So I'm pretty good where I am. I'm happy. So I'm not crying. When I'm crying, I'll let you know. And then Ashran says, do you think IPOE is a 10x stock? I personally think that IPOE is going to go far beyond 10x, but I don't like to tell you what to expect, because that's for you to decide on your own. For me, I see the value in this company as a fintech leader and an infrastructure play, vertically integrated and centralized. So I'm happy with its future potential, far beyond 10x. But again, I want you to take what I say, take what everyone else says, and take what the company says, and then go do your own research and make up your own mind on where you buying, because we're not buying in the same position. If I buy at 15, you buy at 30 or 28, you're not going to get a 10x at the same time that I do, right? So I can tell you it's on 10x, but that's for me, not for you, right? So you have to take your own perspective into mind, right? It's not. I get annoyed when I see everyone on YouTube saying, "Oh, this is the next 10x, 100x, 1000x opportunity." penny stock, because maybe it is for them, but not for you. So that's my little rant on that. I think that IPOE is gonna be very good in the next 5-10 years, and it's gonna make lots of millionaires and some billionaires. So I am happy where I am. Okay, and that's it. And Evan says gem, gem, gem. So a fan of gem. So let's move on to CCIV, Lucid Motors. Some big news for CCIV. Investors, the SPAC, the Special Purpose Acquisition Company that has taken Lucid Motors public, and Lucid Motors has been praised as the Neo of America and the next best competitor to Tesla in this EV revolution that we're all going through. And I like Lucid a lot. I'm invested. I have thousands of shares of this company. So I'm glad when I see news like this. I've actually I try to be very realistic, and I have made a video in the past questioning whether or not they can actually sell these cars, right? If they build these cars, will people buy them? Will people come, right? In the .com bubble, people made all sorts of internet companies, but the money never came, right? And most car companies do fail. So I wanted to know, hey, what's the chances of Lucid Motors actually selling these cars if they do make them, right? Because you can build things, but people won't always come. The money won't always come. But Lucid Motors is showing that, hey, people are actually interested. People actually have sold out of our $170,000 Dream edition of our Lucid Airs. So there's lots of interest here. So let's look at this. So they say that this is the tweet from Lucid Motors, and they've said that as this loads, this is their Twitter page. They said we've loaded a load with luxury. The Dream Edition Lucid Air is now officially fully reserved, and you can join our waiting list for limited edition Dream Edition model with your Lucid Air Grand Touring. So this is very good news for those people who are bullish on Lucid Motors. This represents, there's about 500 units that they do plan to make of these Dream Editions, and that represents about $84.5 million in potential sales for Lucid Motors. So that's great, right? And this is a similar approach as Tesla took back in the day with their Roadster, where they made a limited edition of those top-end Tesla cars that you probably can't buy today because it's limited edition, right? You have to go and buy in the secondary market. So I, as an investor in Lucid Motors, I have a lot more confidence now. Of course, we still have to see them actually build these cars later this year and release them and sell them. But it's good to know that there's people who are really excited to put down $7,500 to reserve a spot to get this car. And I love the look of the car. It's beautiful, and it's on the road. I did a test drive. I did a video 2 weeks ago covering that. So the car works, right? It's functional, and it's a prototype, but it's actually functional. It's not rolling down a hill. It's not rolling down a hill like Nikola, and it's not catching fire like one of our future topics in this video. So their car works. People are reserving it. Look at this. Oh, it's actually $161,000 for the Dream Edition. The reservation deposit is $7,500. That's a lot of money, right? Not everyone has $7,500 laying around just to throw at some reservation and just park their money there, right? If you invested that last year, you could have turned that to $75,000 in this wild stock market that we've been in. So this is very promising news for Lucid Motors bulls out there like myself, and their Grand Touring is not much cheaper than their Dream Edition, and that's probably doing well too because people can't get the Dream Edition, so they're gonna waterfall down to the next best thing. And then of course the Air Touring, and they expect to make, I believe, 6,000 cars in the first year, as in this 2021 to the mid 2022, and then 20,000 cars after that. But the very first edition, the very first model will be the Dream Edition. So this is good news. And yeah, I'm excited for this. I like this. So if you're investing in CCIV, comment your thoughts. I'll get to those in a second, and everything else. But let's take a quick break and, of course, do my little plug because we have to keep this channel running. So if you're enjoying the video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on all the topics we're covering here. And let me know if you want me to keep doing these videos. And if you want to support the channel financially, join us over at patreon.bullacademy.org, and you'll be able to engage on our Discord channel where we share knowledge, discuss the stock market every day, and support one another, and just share new ideas, rumors, and news so that we can all do our own research and then come back, collaborate, and get in early on deals like CCIV, IPOE, SBE like we did in the past. So there's lots of value there. And there's about 100 of us, so I'd love to have you over at patreon.bullacademy.org. So let me just take a quick drink, and then we can move on to some not so great news for one of our EV peers. Excuse me, guys, some allergies. The spring has come, and it is going to terrorize me with these pollen. So anyway, let's move on to Ride and Lordstown. Lordstown has been under investigation by the SEC because their cars. The SEC is questioning their statements on the progress that they're making on these cars and whether or not they're actually making truthful statements. And they've been hit with a short report by Hindenburg, the same people who took down Nikola, and yeah, just more bad news. And then the cars are just caught on fire recently. And there's a video that I want to share with all of you with their CEO talking to CNBC about the allegations about them making false claims about their pre-sales. And it's not the best response by the CEO. So we can watch it in a second, but let's look at these news articles. The first one is Lordstown Motors for real. Ohio is betting big on it. So yes, they have lots of backing. So there's lots of big players and interest back in this company, this startup. And then the next one is Lordstown, of course, one of these lawsuits that always come out for SPACs. They're under investigation. I don't think anybody, and then the CEO says, I don't think anyone, we'll get to that in a second. We keep moving. And then their shares are down 13%. Let's look at their Rise stock. So they were down. They have been down 11, almost 12% this week. And this month, 41% and 56% in the last 6 months. So they haven't been having a great time recently. And there's pretty good reason for that. People they're saying stuff and people don't believe them anymore. And then there's the short report that's claiming a bunch of things that they are falsifying a bunch of records and statements. And their cars are catching on fire when they're saying that we're going to be in production of our first model this year. So your car is catching on fire is not a great sign that you're making good progress, right? So this is reminding people of Nikola, and that is not a good sign. You don't want to remind anyone of Nikola in these days because they came out to be fraudulent. So yeah, I just want to show you this video before I say more on. This might be choppy again, but bear with me. I'm not sure what's going on with this stream. But let's try this right now.
Be clear here. The way that you have characterized your pre-orders or reservations in the past, I mean, you called these on CNBC serious orders. Now, people would look at this and say, if you have a company that's not putting down a deposit, that doesn't have a fleet, but basically are collecting letters of interest, are those truly serious orders?
Well, no, we've always been very clear, right? These are just what they're intended to be, right? These are non-binding letter intents. They're called pre-orders out in the kind of real world. So always classified them for that, and we have a lot of those pre-orders. I think we have pre-orders directly from fleets. We have pre-orders from people that sell to fleets because that's the way fleets buy. Fleets don't buy like, in general, they don't buy like consumers buy. They buy through intermediaries. And so all we've done is gone out, gauge interest, because you got a tool to build something like this in an automated fashion. We're going to build one of these every 6 minutes. We kind of have to know how to tool, and you got to know about a year in front of your building. So that's what everybody uses pre-orders for. They are always, by definition, non-binding, no money down, cancelable. I mean, that's just that's the nature of.
Well, that's where I stopped trusting him, because that's not completely true. People, I just showed you, Lucid Motors is charging $7,500 for these cars, and there's a rival, CCIV, that has actual pre-order from UPS. So no, it's not that people don't put any money down. People are putting real money down in some cases. So he might be right that in most cases they don't put money down, but I just don't like that he's acting like it's normal, and then it gets worse from here. Let's keep watching.
EV startups trying to gauge interest.
I understand that, Steve, but some people would look at this and say, look, you were far more aggressive in characterizing those pre-orders as true commitments, that you have company XYZ that has said, yeah, sign us up for 5,000 or 6,000. Do you regret the way you characterize those reservations?
Well, Phil, all I can, I don't want to get into the specifics. All I can tell you is demand is robust. We've never said we had orders. We don't have a product yet. By definition, we can't have orders, right? So when you're early and you're years away from a product, in this case, 1 year, and now we're down to 6 months. So now that we have the betas, we are starting to be able to shore some of that up. But the pre-orders did exactly what they were supposed to do, gauge interest. Nobody knew if fleets would buy an electric pickup truck, right? It was completely unknown science, no data around it. So we queried them. We have very robust interest, and that's just what they are. They're letters of interest. You can't do any more of that in this stage. So I don't think anybody thought that we had actual orders, right? That's just not the nature of this business.
Shepard Smith here. Thanks on you.
Well, that's not the case. So if you say you have strong sales, strong orders, people are going to believe that, hey, you have strong orders. So I don't know too much about Lordstown Motors. I try my best to stay away from most of these EV startups, right? I'm very selective in my investments. I want to only pick the companies that I believe are the strongest ones and have the best potential for the future. So when I saw Lordstown Motors, when I saw Workhorse and the rest of them, there's a whole lot. There's a whole lot, and that should remind us of the dot-com bubble, when there were just internet companies left and right, pre-revenue, and had no path forward to make actual revenues, and were claiming many things that they just had no proof for. You have to really have some discernment. You have to look into that deeper and not just bite at everything. So I don't know what's going to happen with this company. I don't know if it's real or not, but should you buy the dip? It's up to you. If you believe that this company is going to recover from where they are now, and we've seen Nikola. Nikola had a bad dip too, and they were able to rebound. So if we look at Nikola, if you are a bull and want to buy this dip, we can take a look at Nikola and see how they have been doing since they were accused of being fraudulent. And yeah, so they were up as far as $79. And then when the claims of them being fraudulent came, they fell hard. And they've been falling since then. Of course, there's been times when they rebound. So if you want to swing trade this, you can. And you can have a chance at catching the next big ride if they come out with some big news about their prototypes being actually functional. Then you could swing trade that. But again, I don't recommend swing trading. But Nikola's mostly down, and they're down. Let's see what that percentage is. They are down for the year. Oh, they're actually up 30%, so that's good for them. Yeah. They're down 21% this month, and 6 months they're down 30, year to date 12%, and they're up 30% in the year. So it's really up to you. If you really believe in Lordstown Motors and you think that they can recover from all of this, then that's how I would look at it. And if you think it's all just smoke without any sign of fire, then I would say, hey, that's fair. You can make your own choices. So let's move on from IPOE. I love to hear your thoughts on this, and let me just look at some of these comments. And one of them says, Aaron says, hey Lincoln, how old are you? Just curious. I am 27 years old and should turn 28 soon. And Mother Alice says, just fine. Okay, so internet's good. I'm glad that everyone's coming in good. And Aaron Fisher again says the EV is a bubble in itself. Well, yeah, there's lots of, in bubbles, there has to be something that takes that bubble up, that creates that bubble, right? So there's gonna be some good, but the bubble gets to a point where there's a whole bunch of other stuff in there that isn't exactly good, and it fills up the bubble and blows it up so far that it eventually pops, right? That's what happened with the .com bubble. There were good companies. There was Google. There was Amazon, right? There were so many good companies, but there were many more not good companies. And eventually, people found out. People realized and ran away because those other companies reported their earnings, and people didn't buy it. People didn't like it. They didn't have any actual money. They weren't making good progress. They had no path towards profitability, and then the bubble popped. So that will happen in any bubble. You will have good and you will have lots of bad. So yes, the EV market has good. We have Tesla, right? We have NIO. NIO seems to be real. We have Toyota with their hybrids, and of course they're gonna eventually make some real fully electric vehicle cars. And we have GM taking a more aggressive approach to it, trying to get into the market. So there will be good companies in this EV transition, but there will be bad. And that's why I say you have to be very selective with who you choose. That's why I've chosen Tesla and I've chosen CCIV because they have a good team, Lucid Motors. And I like Arrival a lot, given that they're not just another company putting cars on batteries, right? There's so many companies out there putting batteries in cars and saying, hey, we're going to be the next Tesla. So what, right? You put a battery in a car. What else do you do? Are you vertically integrated? Do you have centralized services? Do you customize services for your customers? Do you have autonomous ambitions, right? Do you have a energy business? Whatever, right? There's so many different ways that you can monetize this space. But there's so many companies that say, hey, we put a battery in a car, so we're EV, buy our stock. No, don't just buy any company that puts a battery in a car or a truck or a bus. So I don't buy most of these companies. I don't like all of these. Whenever there's money somewhere, people will go there, right? You're going to have people go run into the money. So you have to figure out who is actually real in this space. And this that ride Lordstown Motors CEO, just watching his body language didn't convey trust in me, right? So that's just how I feel. Of course, I want you all to make up your own decisions. QuantumScape, yes, I think QuantumScape has potential to actually solve the battery problem. And Volkswagen is betting big on them. And if Volkswagen's betting big on them, I'm pretty confident in their R&D. But of course, they're just in R&D. It's just research and development at this point. There's no actual product yet. So I wouldn't put my whole life savings on research and development unless I really understood technology. And I really can't say that I fully understand battery technology. Right? I don't understand what makes QuantumScape better than Microvast, or better than Tesla's battery, or better than Lucid Motors batteries. So I'm not gonna bet my whole or a large part of my portfolio on QuantumScape. They might actually turn out to be the best one, but they could very well fail, or they could actually figure it out, but then get leapfrogged, right? And leapfrogging will cause a company to fall far behind and maybe never catch up. But of course, there's a lot of space in this market, in the EV battery market. So Tesla's not going to fulfill all of the demand. Neither is Lucid Motors. Neither is QuantumScape. Neither is whoever else is in the market. It's just like the semiconductors. There's a shortage, right? There's going to be so many car makers out there that are going to need EV batteries, and so many consumers trying to buy EVs as we continue our progress towards 10% and then 25% and then 50% market share of the car market in 2030, 2050, and so forth. So there will be lots of space for many winners. But I don't know which one's going to be the winner in this battery space. All I know is that this EV transition is going to happen. And I believe Lucid Motors is going to be a luxury player in this space. And I fully understand how cars work and what makes them attractive. And I understand the vertical integration. I understand the centralization. And I like that Lucid Motors is in that space. And I like that they're now making their own superchargers and whatnot. So yeah, that's how I look at all of this, and I want you to look at it similarly because there's a lot. There's lots of nuance. Don't just go on YouTube and find someone yelling at you about the next 100x opportunity and then just buy what they buy, because they have a different perspective than you. They have different risk profile than you. They can take more risk, right? I can take a lot more risk than most people who are watching me right now. So that's why I want to be very careful in what I say so that I don't mislead you. I can afford to take the risk I take because I get paid pretty well. So if one of my companies go down, which has happened in the past, and my biggest position has gone bankrupt in the past, then I'm not scathed, right? When that happened, I laughed because I don't have any problems, but not everyone has that luxury. So I want you to be very careful in what you're listening to out there, and all these 10x and 100x and 50x opportunities out there. So let's keep reading. A few more comments before we get to IPOE. I did cover this news yesterday, so if you are interested, that I have a full video on that live stream from yesterday, and I was very excited about it. So we'll talk about it in a second, but let me just read a few more comments from the live chat. If you have any comments, leave it in the chat below. So let's see. Anthony Lee says, I think they will bounce back. So that's probably about Lordstown Motors. And Ashwin says, do you think Stripe is a big competitor to IPOE and Galileo? I think Stripe is a competitor, but they're not fully in the same space. SoFi, or what's it called, Stripe is about allowing internet businesses to accept payments, right? Galileo, SoFi is about being an infrastructure for fintech, for banking, right? For investment accounts, making credit cards. So Stripe has some of those services, but it's not trying to do exactly the same thing. So yes, there's competition in the space. There's competition for Galileo, for SoFi, but I'm not too concerned about that because there's lots of space, lots of room to succeed. Robinhood uses Galileo. Dave uses Galileo. Interactive brokers use Galileo, right? So Galileo is in pretty good footing, and there's very high switching cost to these services. So that's why I'm pretty confident in Galileo and SoFi. So let's read a few more comments before we move on to IPOE. Aaron says, don't you think legacy car companies like GM will just turn EV on, and distribution and experiences? So yeah, they will turn it on, but you have to really be fully invested in this space to succeed. Because if you're trying to just put a battery in a car, like I said before, you're not going to build an EV as good as somebody who's dedicated to it, right? So Lucid Motors, fully dedicated. Tesla's fully dedicated, and it goes beyond just putting a battery in a car. You have to make that autonomous, right? Of course, there's going to be licensing, there's going to be partnerships, so they will succeed. And there's lots of space here. There's lots of room here for many players. So yeah, there will be GM and there will be Toyota and there will be Volkswagen who succeed in this space. But I think Lucid Motors will succeed. I think Tesla will succeed, and maybe NIO. So yeah, I'm fine with that. Competition is not a bad problem. There's so much room for competition. So Shannon says they will, but I think it would take them a while to catch up. Yep, I agree. And great points, Lincoln, by the club. Thank you, the club. If you don't know the club and you're interested in DJing and live DJ parties, go check out the club on the App Store. It's very cool. One of my friends makes that, and very proud of his success so far, winning a bunch of pitch competitions. So go check that out. It's just a small plug for him. Very cool. Maybe one day I'll have him on here when he's going public. And Omar Hindi says, I like microvast for batteries. Yeah, maybe. So let's move on to IPOE. I am a bull on IPOE, so don't let me fool you. I am not unbiased in any way. I am fully biased. But I want you to know that, and I like to be very forthcoming with that, because I don't want you to think that I'm just gonna push you to an investment with just a bunch of hype. So I like IPOE for great reasons, but today or yesterday we learned that they are launching a new feature on their app called investing in IPOs, which is awesome. So let me not show you my bank account before let me just stop that before you see my entire financial situation. So we can see here that you can now invest in IPOs at the IPO prices. And I covered this yesterday, and I don't want to go too deep into it now, but the big point here is that we've been screwed over by the IPO, the initial public offering, for a very long time. And we've been left out of the incredible wealth building opportunities that have been in this space for so long. So what happens in the IPO process is a private company says, hey, I'm going to go public. And they go to a investment bank like JP Morgan or Credit Suisse and all of those guys, and they say, hey, help me go public. And then those banks go to their rich clients and say, hey, institutional investors, and say, hey, we have this company going public. You can buy them at this discount, and we expect it to grow or appreciate by this much on IPO day. And then IPO day comes and the stock opens at $45 per share. And the very next hour or a few minutes in, it's at $200 a share or $300 per share, right? I think the average pop, this is called IPO pop, is 40%. The average company will pop 40% on their IPO day. So we're left out of that huge growth in the share price the very next day on IPO day. So the rich people, when you're rich, you get a chance to buy in at the IPO price, which is very discounted. And then the retail investors on IPO day have to buy in on the hype, right? They buy on the hype, like we saw with Airbnb and DoorDash and Snowflake and all the other big names. So we've been left out of all that growth for all this time. But SoFi has now said, hey, retail investors will also have a chance to invest in IPOs that we participate in too. So we're going to allocate shares, IPO shares at the IPO price, the same one institutional investors get, to our retail investor clients, which is amazing. This is very big news. And the reason I'm so calm right now is because I went through yesterday and did my full excitement. So if you're interested in that, go to bullacademy.org. You will see the video or just search it on YouTube. But this is so promising. As a retail investor, you will now have a chance to participate in this great wealth building opportunity. And it can't be understated how much of a big deal this is. We're going to have a chance now. And of course, Robinhood also has a plan to launch a similar feature for their users. So this is for SoFi Invest members, those people who invest using SoFi's Invest unit. So just like Robinhood, you can invest in stocks and ETFs and index funds using SoFi's app. And if you use that and you have $3,000, you can use SoFi to bid for IPO allocations. So when there's new IPOs that is available to SoFi members, you can go in and say, hey, I want 100 shares. You might not get 100, you might get 50 or 75 of those, but you get some at the IPO price. Before you would get zero, you would have to buy in on IPO day. So this is big. I don't want to say too much more because I did a whole video on it yesterday. So let me keep going. And for SoFi investors like myself, IPOE investors like myself, this is huge because as you can see here, SoFi is a one-stop shop. And my investment criteria is the first two things. My investment criteria is vertical integration and centralization. Can you vertically integrate centralized services? Because why does that matter? Because you get cheaper customer acquisition cost. You get to upsell your many services to your customers for free. So SoFi says, hey, you need a bank with high interest yields. You want 2% interest yields? Here it is. But now that we have you in our ecosystem, do you want a credit card? Do you want a student loan financing to refinance? Do you want private student loans? Do you want personal loans? Do you want a home loan? Do you want to manage all of your finances through our system? Do you want insurance? Do you want life insurance? Do you want small business financing? And all of this comes to SoFi for free. Once you're in the ecosystem, they just send you a notification and say, hey, we see that you're saving lots of money. Maybe you should invest in the stock market. Oh, we see you're saving so much money. Maybe you should get a credit card so that you can actually build credit. Oh, we see how great your credit is. Maybe you should take out a personal loan if you want to renovate your home. Or you want to buy a house. Here's a home loan. And we know how good you are at credit with our credit because we have your credit card. We give you your credit card. We know how much money you save and how much of that money goes to bills. So we know that you're trustworthy. So here's a home loan at this interest rate, right? And we see that you've been investing in your little small business side gig. Do you want to grow that? Here's a small business financing product, right? So they know everything about their customers, which banks don't know. Traditional banks know nothing about their customers. So they can't offer them these services because they have no idea if they want it. But then it goes further. SoFi can say, hey, we have you in our ecosystem. We have your email address. So here it is. We don't have to market to you. We don't have to take our expensive TV ads, expensive Facebook and Google and Instagram ads to reach our customers because we already have 1 million members on our platform. We can just push our new services to, and that's how they got me. I went in for their high yield interest rates, then I refinanced my student loans, and then I just recently got a personal loan from SoFi. It came to me in a day, and the next day I had the money in my account. So that is extremely powerful for a company that wants to become profitable. And they expect to reach profitability, I think, in their first quarter as a public company. So this is the reason why I'm so focused on centralization and vertical integration, because it's free marketing. But even further than that, it's better customer satisfaction because it's a one-stop shop. I don't have to go anywhere else to get all of this stuff because all the other banks make it so hard to get a mortgage. Make it so hard to even get yields on your savings account. They give you 0.01%. Why would I go to them if I can get 2% at SoFi? So that's why I'm so bullish on SoFi. And anyone who says otherwise, I need you to explain to me why you would say that if it's not just hate. Because look at these app ratings, right? So anyway, let's move on from SoFi before I go into an even longer rant. And let's talk about Tesla. But before we get to that, if you're enjoying the video, like the video below, subscribe to the channel, hit the notification bell, comment your thoughts below. And in the live chat, let's read some live chats. So Anthony says, game changer. This is a game changer. This should be absolute millionaire maker. IPOE has revolutionized the game for retail investors. That is very true, Anthony. It's going to be big. And Aaron Fisher says, GM and Toyota will not take a crack at EV. They have money, reputation, and necessity to keep their market shares. Yep, that's right. They also have factories, infrastructure, etc. Vehicles, sensors, and software will be handled by the world of software engineers. And yeah, you make good points, but I still think that there's a big enough market for everyone. So Aaron also says, I like IPOE. I do too, Aaron. I'm glad to hear that. And ABC Highlight says, you're starting to sell me on IPOE. Yes, I'm glad to hear that because personally, I would love for everyone to just turn a blind eye to IPOE and let it stay flat, let it stay cheap for the next year, for the next 2 years, and I'll just keep buying up the shares. I would love to get to 10,000 shares of IPOE. I'm almost halfway there. So so pretty much what I'm saying is that if you love a company, if you like it, you want the stock price to stay low for a while so that you can keep buying it up, right? But I love to share because there's enough room for everyone to succeed. I can't buy all the shares, so I'm glad when people say they want to buy what I'm interested in because I believe in what I'm buying. I believe in the companies I invest in, and that's why I invest in them because I practice the bull mentality. And as you may know, if you've been here for a while, the bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. And the reason that we practice that is because in the good times, yeah, it's easy to buy in the good times. People love to buy, right? When everyone's going up, when GameStop's going to 1,000%, and AMC and Bed Bath and Beyond. So all those times are easy. But what's hard is staying at it for the long term when stocks are going down. So recently we've seen YouTubers have been complaining about how their ratings are down, their viewerships are down, and their revenue is down because people in the stock market have stopped watching YouTube videos and they stopped clicking on YouTube videos because we're going through a correction. So everyone's running away from the stock market. But when things are going down is when you want to buy. You're getting a discount. So it's very unfortunate that, yeah, YouTubers like myself are getting less views because this is the best time to be watching and learning, and you can buy in on these discounts for the next big boom. Because once this correction is over, we're gonna rebound, and those same people who ran away are gonna come back and say, "Oh, I thought I would get rich quick," and then they're gonna buy on the hype, buy the top, and then it's gonna fall again for a little bit. They're gonna run away and they come back by the top and they stay poor. That's how you stay poor. So you gotta stay at it. Just be patient. Keep buying, dollar cost averaging in, and stay patient. Practice the bull mentality. I don't just say that. I mean it. So let me read a few more comments before we get to Tesla. And let's see. Aaron says banks have a lot of overhead that SoFi will never have. That is correct. And I can't wait till they become a bank. I'm very excited for that. A fully chartered bank, and they still won't have all that overhead. I don't have a price target for IPOE. I just buy for the long term, and I believe that my companies are going to continue to grow. I'm an owner, not a trader, so I'm going to just buy and keep holding. So Shannon says Toyota already teased the release of the first Toyota EV concept. That's correct. Omar says IPOE will be over $100 in the future. Easy, send it. Hey, I agree. I see IPOE doing at least 5x, 10x in the next 5 to 10 years. So I have no concerns about that. And he says I bought 1,500 shares of Square at $10, and he sold at $16, and he's never making that mistake again. Know what you're holding, and just continue to hold it. That's what Omar says. So let's move on to Tesla. Tesla full driving. Tesla full self-driving. So Tesla, I'm a bull on Tesla. I believe in Tesla. I bought them at $200 per share. Even actually less than that in 2019, the summer of 2019, when everyone was saying that they're going bankrupt. So I love to buy at the bottom. I love to buy when everyone's afraid, and I love to get great deals. I did the same thing with Jumia and Upwork and so many others. So that's where I make my money, at the bottom when there's so much fear. So I'm bullish on them, but Elon has made too many false promises. I remember when I heard him say that we're gonna have robo taxis in 2019, and then I got in an Uber with my friend. We're going back home from some event. And I told him about how I invest in Tesla and how I'm so excited about the robo-taxis coming next year, 2019. And never came. I don't know why I fell for his false promise again, because he's notorious for that. So people are investors and owners of Tesla are losing their full cultish faith in Elon, and for good reason. So I was reading this Reddit post earlier this week from Thursday about how Tesla owners take to Reddit asking what happens if full self-driving isn't real. What happens then? So if Tesla doesn't ever fulfill its promise of full self-driving, will they be culpable for will they be legally exposed? Or will they have to pay back all these expensive full self-driving fees, like $10,000 for this feature, and the opportunity cost that comes with that? Of course, you can't argue opportunity cost in court. So, or at least I haven't seen it done. So there are serious questions that owners have around all of these delays. I personally don't think full self-driving as it's being described by Tesla is going to happen for quite some time, just given that there's lots of policies that have to be put in place, lots of standards that have to be put in place. It's not up to Tesla on their own. Tesla can just say tomorrow, oh, we're going to do full self-driving. Full self-driving, and this is important for all those people out there who say they don't like socialism. Full self-driving, autonomous vehicles is a socialist product. It's socialist. Why? Because full self-driving, autonomous driving is relying on the infrastructure of the government. The government builds the roads. The government maintains the roads. And who is the government? Taxpayers. We pay for those roads to be maintained. So if the roads are not maintained, if the roads are not in place, if the roads are not prepared, if the streets are not prepared, if the people are not ready for this system to take place, it's not going to happen. If the government says, nope, you can't do full self-driving yet because we don't trust it, your car is not meeting the standards, your car doesn't have enough cameras, doesn't have enough sensors like LiDAR and radar and all those other sensors. If you do not meet our standards that we just came up with yesterday, if you said that all your cars in the past will be ready to do full self-driving in the future, but they don't all have these standards that we just put in place today, your cars can't be full self-driving. They just can't. So it's not fully up to Tesla, and that's what we're seeing here. And that's part of what we're seeing here. But full self-driving in itself is a hard thing to pull off, especially if you're depending on computer vision, which requires that you train these vehicles to recognize situations. And that requires a lot of computer processing and time. It takes time to do this right. So we've seen recently lots of accidents with Teslas, and that's because this is a what's it called? Try, fail, and try again, right? You have to continue to iterate on this, and there will be casualties and there will be fatalities, right? And that's very unfortunate, but that's how progress goes. So they have to be very careful, and I'm fully understanding of them delaying this process. But then what's even worse is Tesla Bull is not going to like this, but what's even worse is that Tesla and Elon have been fully misleading people. They say their cars are full self-driving, which means to any human who speaks English, they will be able to fully self-drive. But by the standards, the people who make these standards, SAE, they're only level 2. Full self-driving for Tesla, as they currently have it labeled and rolling out in their beta programs, is only level 2 of 5. There are 5 levels to full self-driving, and Tesla's at 2, but they're calling it full self-driving. It's not there, right? So people are confused. Like, that's why you see people going behind or going in the back seat, thinking that their car can drive themselves when they can't, because they're not level 5 yet. You can't take out the steering wheels. You can't take out the human inputs. People have to be behind the wheels, and there's going to be lots of errors, and you're going to have to be ready to take control of the car if things go wrong. But they're telling people that, hey, it's full self-driving. It's fully autonomous. That's what full self-driving communicates with people. So the name should at least include level 2 full self-driving, or level 2 autonomy, not just full self-driving. That's very confusing. People are getting impatient, and Tesla and Elon has been notorious for just saying things over and over, but that don't get realized for years. So I don't blame these people for being impatient and questioning their dear leader. Of course, I don't like cults, so no one's my dear leader. I don't believe in that. So I'm gonna follow Tesla for as long as they continue to deliver. But if they keep lying, which is what they're doing, we have to be frank here. We have to be very clear with our language. They have been lying, and if you want to, at best, they've been misleading people, right? At best, they've been misleading people with this language. But I still believe in Tesla. I think that they can figure it out, and I hope that they will figure it out. But we have to be critical of these companies, right? They're not gods. They're not, and I don't believe in gods. And they will fail at some things. They will mislead us in some areas. We have to be discerning. So again, I like Tesla, but there is a lot of confusion in the air. And I could read this article to you, but I'll leave the link below. And there's a video, someone made a video showing all the times that Elon misled people on with the full self-driving claims and the robo-taxis. So one day, we probably will have robo-taxis, but we're not there yet. So that's what we're seeing here with Tesla this week and the last few weeks. So I would love to hear your thoughts on Tesla. And like I said, I bought Tesla when let me show you. So Tesla stock. I bought Tesla. Where are we? 5 years. This is 2020. I bought Tesla in May or June. So yeah, May of 2019. So here. This is where I bought Tesla. So I've been a bull of Tesla for a long time. Well, relatively long time, because Tesla's been around for a decade now on the public markets. But I'm not a bandwagon hopper on Tesla. But I'm also not buying Tesla at a $600 billion valuation when all they make so far are cars, and of course they have their batteries, they have their electric, they have their solar power and all of that, so that's great. But this valuation implies full self-driving. They're not anywhere close to that yet, in my opinion, as a software engineer. This is not easy stuff they're trying to do. I think they can figure it out, but it's not easy. People are acting like it's easy. Then we're not going to wake up tomorrow and it's going to just be here. Right? There's going to be lots of failure along the way, lots of setbacks. And not everyone's ready to keep in it for that long. So yes, Tesla's gonna be good. I believe in it. Kathy says that Tesla's gonna be a $3 trillion company within the next 5 years. She made big claims before, and people laughed at her, but then it happened. Right? She said Tesla's going to $4,000. It's now at what, $20,000 adjusted for the what's it called? For the split. So she has made big claims in the past, and it's come true. So I don't want to act like I'm laughing at her. But $3 trillion is a lot of money. Even Apple that hasn't gotten that far. Right? But Elon says, hey, we might become the biggest company ever. So maybe they will get the $3 trillion, but I don't see any reason they have to without full autonomy, without the robotaxi, without their license, their software licensing. So maybe if they can actually figure all those things out and be 50% ahead of everybody else, or even 40% ahead of everyone else, and license out their technology, then maybe they can dominate this market. But we have Google, right? We have Mobileye, we have Cruise. There are so many players in this market, but everyone tries to ignore that and put blinds onto the rest of the market. Tesla will not monopolize this market. I don't see that happening. Once they figure it out, everyone else will figure it out too. And it will just be who has the marginal feature that makes them a little bit better than everyone else that will get more of a market share. But I don't see Tesla getting 30%, 40% of this market and keeping that, right? That's just my opinion. I don't see it happening. I think people are dooming themselves to failure if they put on blindfolds and think Tesla is going to be the only player in this market going forward. It's not going to happen. That's not how it works. We've seen it. Tesla used to have what, 10% market share or some crazy number of market share in the EV market, but they're going down steeply as more people come into the market. They're not going to monopolize it. It's not going to happen. So I love Tesla, but it's not going to be a monopoly in this space. It's just not going to happen. It's not built that way. That's not how this market works. They're not a fully software company. There are only a few true monopolies in software, right? And Elon is working with hardware and software, and the software he's working with requires lots of R&D. They can be leapfrogged, and there's going to be so many other players that figure it out when they figure it out, or even before them. So there's no fact today that says that Tesla is ahead of everybody else. Some companies claim that they're ahead of Tesla. It's about who you believe. So that's my take. I'm renting at this point. I love to hear what your thoughts are on Tesla, and if you're buying it at $880 or $618 per share, which is what, $3,000 per share at this point before the split. So yeah, let's read some comments real quick before we continue and conclude this stream soon. So let's see. Let me read a few more comments. Thanks for all the comments, guys. It means a lot. Let's see. Oh, there's a lot so far since I last read. So yeah, keep your comments coming. Omar. So yes, Aaron asked if I have sold some Tesla since 2019. Yes, I sold Tesla when they were. I had 10 shares, and I sold most of them before the split, or some before and some after the split. So I have Tesla in my passive future tech pioneers portfolio because I don't believe they're going to be a growth company for quite some time. I have my growth portfolio is what I focus on this channel, where I show all of you. So no, they're not my growth portfolio because I don't see them 5x or 10x in it anytime soon. But I still want to hold this company. I want to own Tesla. I want to be an owner. I just enjoy owning great companies. So it's not a active investment for me. And Omar says they were disrupted to making sales for small business. That's correct. I believe that was on SoFi. And Javier asks, is my account 170K or 200? I'm being lazy on these. My Chiron at the bottom, my bottom third. This was my portfolio value a few weeks ago, but now it's at 170. So what you see on the thumbnails is my actual portfolio value in these live streams, because the live streams take a lot of work to actually put together and make it look like this. So I don't change the live stream setup too much. But yeah, it's a little bit misleading, but it's all right. It's not that bad. It fluctuates. Everyone says he loves freedom. I do too. Mel says my concern with Tesla is as of today, it's just a car company. In order for it to justify its trading price, it needs to change the world. So yes, I think they've changed the world so far, but there's a lot of room left to go. They have a lot of work to do to meet these valuations. I think they can get there, but it's kind of tough right now with all these delays in full self-driving to really wrap your head around these valuations and growth beyond where they are today. Right? I think they can do it, but there's a long way to go. And Ashran says, I think they are years away from self-driving. Realistically, you need all cars to be connected in some way, and older cars do not have the capability currently. That's correct. Omar says he just needs one to the moon. That's right. You don't need all your companies to succeed. You don't need to have 100% hit rate. If you get 30%, 40% of your portfolio to succeed, that's very good. That's why I only have a few companies in my portfolio. I'll just pick the very best and stick with them. So Ashwin also said, plus you need to send, this is on Tesla, he says, plus you need to send data back and forth from the server rapidly to recognize a scenario in the first. Actually, no, that's not correct. So where we are today is we have, what's it called? Edge computing, right? That's what everyone's working on right now. I think OSS is one of the companies working on device. Oh, sorry, OSS stock. They are working on device computing for autonomy and or artificial intelligence. So they can do the computing on the device itself and then upload the results later on, right? And then of course reach out to the server to get more data. So no, they don't need to constantly communicate with the server because that would be very risky. If you had to make a decision and there was great latency between you and the server, and you couldn't choose to not hit that kid on the sidewalk, and whether or not to save your driver or hit that kid because you couldn't reach the server in time, then yeah, that would be bad. So no, these cars are built to do the operations on the device themselves, on the cars themselves, and they can speak to the servers later on. So yeah, that's an important distinction there. We've come a very long way from having to communicate with the server. Omar says self-driving will be crazy, seeing people on their phones or people making out while their cars are driving. That's correct. And Omar says yes. Kathy said, but Kathy said 3,000 or 4,000 future price target. I think she called it last time. Tesla mooned coming from a smart lady. That was a little hard to read, but yes. Kathy is credible, but she can be wrong. She doesn't have to be right. She won't always be right. So she was right in the past, doesn't mean she's gonna be wrong right in the future. But she has credibility, so there's reason to believe her. But again, just because she was right in the past doesn't mean she's gonna be right in the future. And a $4,000 price target, which is $20,000 adjusted for the split, it's way out there for me. But if anyone can do it, it's Tesla. And Anthony Lee says, I think Tesla will rise and then fall. And the tech will be advanced and the ones coming behind will benefit the small most. Oh, these are hard to read, guys. You gotta punctuate for me, please. I have hard time reading already, so do me a favor and punctuate. Have small most, it's important to be aware of the ones expanding on their technology, yes. So don't just put a blindfold on and just watch Tesla. Watch the whole market. There's many opportunities out there, and Tesla is not the only one. I'm still holding. Dare ask if I'm still holding ChargePoint. Yes, that's correct. I'm still holding ChargePoint. I hold most of my companies long. And how long have you been investing in the market? I have been investing actively in the stock market since 2019. But of course, I own my own businesses and been investing since I was in high school. So, yeah. So anyway, that was the end of our stream. That's all I have for you today. But I appreciate you all being here. And if you have any future thoughts and want me to cover more, let me know in the comments below. If you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts on all that we've covered here. And if you want to support the channel, reach more investors, reach and get more access to me, get direct answers to investment questions, then join us over at patreon.boacademy.org. That's where we discuss the stock market in real time every day and discuss the stocks and SPACs that we're all invested in to help one another find new opportunities, get in early on deals like CCIV, where we got at $12 per share before we went up to $65 per share, SBE, ChargePoint, and IPOE, and so many others, right? That's the value of the community, where we can encourage one another to keep going and to find new deals and bring all of our brains together and just share different perspectives. So there's 100 of us right now. I would love to have you all over there at patreon.boacademy.org. Thank you for being here. I'm Lincoln with boacademy.org. Thank you again,